Good morning. It's Thursday the 8th and that means two things. Firstly, the Bank of England is meeting today. Secondly, we're nearly at the weekend. So 2 more days to tick off the to-do list and smash this week out the park. The headlines from the market are Brexit, hard deal or no deal, seems to be back on the negotiating table. The Bank of England's meeting today and may well see an economic reality check coming through there. And the euro is largely unaffected by the German government deal that has been reached. So I've just read a summary of a government commissioned report. You know, that's how I roll. But it was going into a series of scenarios aimed at getting their best guess of what the outcome of Brexit may be to different regions and different industry sectors across the UK. The findings suggest that the effects may range from serious all the way through to devastating. So it's obviously not a confidence-inspiring report. Also, suggestion is that the hardest hit region will be the northeast of England. So why I man to that? A couple of points do seem to be coming through loud and clear now. And firstly, it's that no matter what kind of Brexit deal is negotiated, the UK economy will be hit hard. And it will take a couple of years at least to recover from whatever shock is imposed by the ultimate deal. And secondly, at the moment, Brussels is in certainly no mood to compromise on any of the UK proposals. Obviously, phase 2 is still in the early stages, so there's a lot of sabre rattling. But you know, certainly at the moment, the outlook is fairly bleak. In the market, sterling seems to, well, has been pushed around largely this week by the equity markets and reaction to that risk-on, risk-off move that has been driving the dollar. Yesterday, it seemed to return to its downward trend and reached a new low of about 138.80, I think. We'll put the details in the comments below. Against the euro, it stood up a little better and it has held up above recent lows, closing yesterday at 113.20. But all in all, it does seem that the recent sterling rally may be over for the time being. Over in Germany, you know, they have finally reached an agreement and struck a grand coalition. This ends the longest period that Germany has been without a government since the end of World War II. So a fairly important deal to be struck there, and it's been a long time in the making. The euro was largely unaffected by the news and has been being led by the recent dollar strength. It fell down to a new low of 122.45 against the dollar yesterday. Looking ahead at today, obviously the main event is the MPC meeting and indeed the quarterly inflation report. The vote is very much expected to be 9-0 in favour of no change to either the interest rate or the asset purchase scheme. They will remain at 0.5 and £435 billion respectively. Anything else that comes from this, and you know, if Carney does soften his words or moderate the message in the press conference, perhaps indicating that a May interest rate is off the cards, there is a chance of a sterling sell-off. We'll keep you posted on this throughout the day, but if you've got any questions, drop them in the comments below and we'll do our best to address them for you. Have a great day. I'll see you tomorrow.